Now let us look at some of the common reasons why people get attracted to this career of being a full-time trader. The main reason is basically they want to get away from something that they're doing currently, and they want to be their own boss. Second most common reason is trying to make big profits with seemingly little effort. Third reason most of the people have this dream is because they look at the success stories in the market. A person who started at 5,000 rupees is now worth 500 crores. Fourth reason is that people believe that they will be in complete control of their time. They don't have to work compulsorily like they have to in their present job. Trust me when I say this, all this can't be further from the truth. It is not what it looks like. The glamour of being a full-time trader, or at least as it is portrayed on the social media, is not how the reality looks like. Reality is often completely different and not always as pretty. Let us take a hard look at reality. Let us look at the 4 or 5 benefits of being a full-time trader that we just saw and analyze it in a little greater detail. The first benefit, it is true that you are your own boss and you are in control of your decisions, but it is not as simple as it looks. The first thing that people often don't realize is they are being a part of an elaborate system, a company, an organization, and there is a certain kind of structure and hierarchy that is there. Although people feel constrained in that system, in that hierarchy, in that structure is probably doing 90% of the things that they believe they are doing. The moment you get out of that system or that structure or that organization will not be there to back you up. People often don't look at you, but the organization you represent when they deal with you. And the moment you get out of all that, they will not respect you. This lack of structure becomes the biggest impediment to your success. In short, you are not as smart and as organized as you believe yourself to be. Second, preposterous assumption of making big profits with seemingly little efforts is probably the downfall of half of the traders who try to become full-time traders. First of all, there is simply no free lunch, be it trading or anything else in life. The greed of making money without putting in the requisite efforts, without committing time and capital, is what enables the snake oil salesman to sell you a dream that is simply not true. Now, believe me when I say that I have worked harder than what I used to do when I was having my job, and I was working hard in my job. But when you are on your own, there is a big danger that all the hard work that put in may simply take you in the wrong direction. So whatever work you are doing, if it is not in the correct direction, you will realize that you have come too far away from where you started and also away from where you wanted to be. But trust me when I say, the joy of discovering the right direction and then pushing yourself to the limits to achieve your goal, to reach your destination, is simply amazing and is parallel to none. The third and probably the most stupid reason why traders want to become full-time traders is they believe that if someone made 500 crores from 5,000 rupees, they can do it as well. Nothing is further from the truth. I mean, people can get incredibly lucky in the markets, and it does happen all the time. But that does not mean that kind of success can be replicated. It is complete madness and there is no method to it. Now, also, every person is different. Their mindset, their psychology is different. So it is really difficult to replicate what one person has done and expect the same results from the markets. Now, this is one place where Dean Trading Framework is completely different from other courses. It is not a system, a setup, a method that you have to follow, rigid rules that you have to apply every time you try to take a trade. No, it's none of that. What it is a way of looking at the markets. And that will change your outlook of trading forever. Then no matter what market does, you will be able to adjust to the market's changing situations and then execute your trading plan perfectly. And because of this, I have received genuine feedback from hundreds of traders saying that once they joined DTF, the amount of stress and anxiety they felt in trading have gone down drastically. And the same can happen for you. Please don't fall for those promises of big rewards, big profits. Believe someone who is sharing the process with you, which will help you achieve good results in your trading. A setup, a system, a method is simply not the answer. And the last one is the illusion that you will be in control of your time and you can take a break anytime you want. Let us find out the truth behind that. Again, it's not what it seems. I have worked much harder after leaving my job when I decided to become a full-time trader. I hardly took any breaks. I know there were years on end when I worked 7 days a week. Every day I would come in early and I would stay late, and I have worked so hard to come to a place where I am right now. You can work incredibly hard like me, but if your hard work is pointed in the wrong direction, it's not going to benefit you at all. So one more reason for starting DTF is to point all the hardworking traders like you in the right direction. so that 1 year, 2 year, 3 year, 5 years down the line, you will not find yourself in an unknown territory where you never wanted to be. So if you believe that there will be no restrictions on your time, you will be completely in control, you can take a break anytime you want, think again. The struggle that you have to go through is not pretty. In fact, it is very, very ugly, especially if you have not done proper financial planning before you leave your job or business and decide to go trading full time. So what are the requirements of becoming a full-time trader? Becoming a full-time trader demands certain traits of you, but more often than not focusing on correct things can lead you into trouble. So here are a few things that you should focus on if you have the dream of becoming a full-time trader. Reasonable rate of return. This is the big one. If you can't be satisfied with a reasonable rate of return, you will always keep chasing the impossible and in the bargain end up making almost all of the mistakes that are to be made in trading. You have to focus on the process and not the results. Often people will get attracted to this trading business by looking at those big mark-to-market profits that are posted on the social media. Those are unrealistic and often grossly overstated. There is only one place where you can get a genuine feedback about a trading method or a system or whatever you want to follow. And that is your own P&L statement. If it is in the green, you are doing good. If it is red, you have to change something. Focus on understanding the markets better before trying to make money in the markets. I am guilty of often judging a trading system based on the results it produces, until I realize that there is simply no correlation between your analysis method and your ability to make profits. You can use the best tools in the business or as something as simple as trend lines and end up making big profits in the markets. You must learn to understand the markets first, which is actually the job of your analysis method. And having better market understanding will definitely help you in reducing your trading mistakes, which is often the first step towards successful trading. Later, you should focus on assessing, controlling, managing, and exploiting the risk in the markets. It is the ACME principle that we follow at Dean Trading Framework. Find good mentors who show you the actual path to follow and not just flash some hollow dreams in front of you. I never had a mentor as such. I mean, there were many people who helped me along the way and I'm eternally grateful to them. But if I had a full-time mentor to answer all my doubts and queries and stop me from taking those wrong decisions, I would have made all this progress in a much, much shorter period of time. Now, what is the process of becoming a full-time trader, a successful one? Well, it's all in the process. There is no secret formula. But one equation I have found to be consistently true in the markets is the following. And it says, better market understanding leads to better trading decisions. Better trading decisions will help you reduce your trading mistakes. And reducing your trading mistakes will eventually help you achieve consistent overall profitability. Now, if you can nail this equation, you can fulfill your dream of becoming a full-time trader and a successful one. Now, let me show you how Dean Trading Framework can help you achieve this step by step. Now, better market understanding can be achieved by weaving together core trading philosophies into a strong fabric of deep market understanding. For this, we are using 4 core trading philosophies: the Wyckoff market cycles and schematics, the auction market theory, the innovation adoption curve, and finally, the 4 steps of market development as suggested by Peter Stadelmeier. Now, better trading decisions can be achieved by using some really great sophisticated tools for analyzing the markets, which will help you convert your market understanding from the 4 core philosophies into actual trades in real-time markets. For that, we are using market profile, volume spread analysis, order flow analysis, and finally, using all these tools to find good trading opportunities into options, which is the instrument of choice for me in my trading. The third part of the equation is to reduce your trading mistakes. Now, you can do that by applying the step 1 and 2 that we just saw. You can achieve this by applying the ACME principle of risk management that we share in great detail in the Dean Trading Framework. Getting a handle on risk will reduce the impact of mistakes on your trading account, and it will also help you leverage the profitable trades. Now, consistent trading profitability will be achieved if you nail steps 1 to 3. Being profitable is a state of mind. If you believe that your market understanding is becoming better and better day by day, then you can rest assured that you are making definite progress towards your goal of becoming a consistently profitable trader. Understand one very, very critical concept, that trading is always a struggle between creativity and productivity. It cannot be boiled down to an art or a science. Only when you combine both the art and science part of the trading, you will be a successful trader. Now let us look at how successful trading looks like. I conducted my first options intensive in the month of May 2021. Since then, I have promised to share all my trades with the members of my Discord group, and I have been doing it consistently. So far, the journey has been uneventful, but the learnings along the way are tremendous. I started trading a demo account, and I am going to share my results with you today. Let us now go through the ledger and the P&L reports step by step for the period starting from May 2021. The first point that I want to discuss is the capital deployed. So I started with an account which had 4 lakh rupees. That is exactly what I have considered for calculating all my returns and everything. And most of the times the position sizing was also based on an account worth 4 lakh rupees. Now, you might ask why I am using a 4 lakh rupee account. Because I believe that is exactly what most of the traders will be starting with, or that is what most of the traders should be starting with. If you have more capital, that is all right. Unless you have account which is between 5 to 10 lakhs or 4 to 10 lakhs, you should not really get into these risky volatile instruments. The second point that I want to discuss is the money management rules that I follow. Now, the rule here is very, very simple. The idea is to always have sufficient amount of capital in your account to make adjustments to your existing trades should things go wrong. The money management rule was very simple. Keep 50% of capital free. The next topic is profit targets. How much profit I was trying to make during this period. Now, I am trading weekly expiries, so my target is to make 0.5 to 1% on capital during that 1 week. Now, it is not a margin money that you are using. It is actually the total account capital. So, when I say total capital, let's say I have 4 lakh in my account. That is exactly on which I'm going to calculate the returns. Alright, so my profit target was 0.5 to 1% per week. That comes to roughly 25 to 50% if you do not compound the profits. Thankfully, I have been achieving my targets on a consistent basis. One thing you should understand is that you can aim for higher returns or lower returns. But the higher the returns you are targeting, the more will be the volatility in your P&L. So I have that balance maintained between my peace of mind and earning a reasonable rate of return when I am targeting 0.5 to 1% per week. Then we come to the trade management rules. Now, these rules are triggered whenever 2 of the following scenarios emerge. 1. The trade goes in my favor or the trade goes against my expected direction. Let us discuss what happens when the trade goes in my favor. If the trade goes in my favor, I am very happy, first of all. And then I have 2 things to do now here. If the trade has just slightly gone in my favor and it looks like it might just stay there till expiry and I will be collecting all the premiums in my credit spreads, I will use the asymptote principle where what I do is, let's say I have my short option. I shorted it at 50 rupees premium. The moment that 50 rupees premium comes down to 25, I will add more to my position. So if I started out with 4 lots, I will add half of that when the premium drops to 50% or I make 50% profits, in short. If it drops 50% more, then I will again add 1 lot. So I am consistently reducing the amount of position I am adding on by 50%. The second one is, if something drastically changes, if the market goes incredibly well in my favor, then I may roll up or roll down my position. So if I have a bearish credit spread and market goes down drastically, I will roll down and come closer to the current market price. Because something fundamentally has changed and the market is just going to go much lower, that is what gives me the freedom to go closer to the current market price. So these are the 2 ways I handle my winning positions. Let's say the market goes against me. Then I have a few things to do. One, obviously I'll have to roll against my expected direction. So if I am expecting the market to go down, I have established a bearish credit spread and market actually goes up, I will have to roll up that bearish credit spread. And I will roll it up. I may or may not increase the size, but the objective for me is to recover whatever money I have lost on my original position. Second thing I can do is, if I believe that my whole market analysis is not on point and actually the market is now more likely to go up instead of down, I may add bullish credit spreads from below to even further recover the losses that I have made on my original position. Now, sometimes it so happens that you roll up your original position and you add new positions and you do all that and you actually end up making money on that trade instead of just recovering your losses. It has happened on many occasions where I managed to recover my losses and then I also was able to make additional profits even when my original analysis was proved wrong. This happens many times when you are trading options, but that should not be your objective. I have time and again cleared this point that whenever I am seeing the market disprove my analysis, my trades, my first objective is to get out of the trade at break even. All right, let us now look at the actual ledger and P&L reports of what exactly has been happening in the account. All right, so this is that ledger, and you can see it started with the month of May, and I have included all the trades, and whenever I have added money, whenever I have withdrawn money, I have updated everything here, and you can check it at your own leisure. All right, this is the ledger. Now we come to the P&L report, and this is where it gets interesting, because this is exactly where you get to see your results. This report is updated till the expiry of 18th November 2021. All right, so by 18th November 2021, I have a gross P&L of 81,686, and if you remove all the brokerage and STT and clearing and stamp duty, all those charges, if you remove, then the net profit and loss is 75,495 rupees. All right, these are all the trades I have taken, and I have broken them as per the expiry. So this green is one expiry, then the white is second expiry, then green is next expiry, that way. And also the way these reports come, they will stack all the call trades first, and then they'll stack all the put trade first. So sometimes it happened that I had both positions, both bearish credit spreads and bullish credit spreads. But here they are separated by the way the report is generated. So what I have done is I have created a worksheet where I have brought those two trades together with the P&L. Now, if you want to verify whether this P&L is correct or not, you can go here and you can see I have made some calculation. I'll show you. You can see these are the calculations. I have added the P&L reports and everything, and I have created these little bit of calculations, and then I have moved those calculations here. And then if you look at this table, this gives you the summary. So you can see I have been trading for 6.5 months roughly. I have made 49 trades. Total weeks I have been trading is 23, including the one that ended 18th November. The capital deployed was 4 lakhs. The profit is 78,916. And now this here does not include the brokerages and other charges. So these are all the trades. Now here I have made some of the adjustments. So RURD is basically roll up or roll down. And then if there is an F at the end of it, it means that roll up failed, or the trade was failing, and that is why I had to roll up. And if there is an S at the end, it means that it was a successful trade and I actually rolled up or rolled down in the favor of that trade. Okay. And then if I had made some adjustments on any of the trades, I have added adjustments. All right. So if you calculate, the P&L based on all this, it is in the range that we discussed, 0.5 to 1% per week. That comes to 2 to 4% per month, and roughly 24 to 50% annually if you don't compound it. So right now, the actual return, all right, the actual return that I have managed, is 19.73% on the capital. That's actual return. And then if you break it down, profit per week and month and annualized, then you are getting these figures. Now, 30 to 40%, if that is the return I get at the end of the year, we have already in the 7th month, 5 months remain, and then we will know how I do at the end of the year. I think I am very, very happy. So I am quite happy with these results. And I just wanted to share it with you just to show you that, okay, this is what we have been doing since the May 2021 from that options intensive. Now let us go back to the video. One thing you must understand in trading world is that everyone will have their own definitions of success and failure. For some people, doubling their money every month is what they will call as trading success. And some others, like me, are very happy with much lesser returns. At the end of the day, you have to find out your own reasonable rate of return in the markets. It will often be a combination of multiple factors. Factors like the amount of risk you are willing to take in the markets, the total capital that you have deployed, your own expectations from the markets, the opportunity cost of trading in the markets, what are you giving up to trade in the markets, and most importantly, the level of your market understanding. I had to go through a lot of trials and tribulations to be able to share what I've shared with you today. This video is very important according to me for each and every trader, whether you're a beginner or an experienced one. It's your choice. You can struggle for years on end, or you can apply the things that I have shared with you in this video and reduce your learning curve and the time it takes you to become a consistently profitable trader. I hope whatever I have shared with you in this video helps you. I thank you for watching this till the end, and I'll see you in the next one.